Hi there, and welcome to the Rev Room, powered by BizRev Advisory. I'm Francois, CEO of BizRev, and it's great to have you with us. This channel is where we unpack real-life stories behind business growth, from strategy and finance to compliance, people and purpose. Whether you're a startup founder, a seasoned business owner, or just curious about how to build something that lasts. The Rev Room is where development meets insight. We'll be sharing practical advice, behind-the-scenes real-life stories, interviews with bold entrepreneurs, and tools to help you grow smarter and maybe even sleep better at night knowing your business is on the right track. Don't forget to like, subscribe, and drop your thoughts in the comments. This room works best when it's a conversation. Let's get into it. Welcome to the Rev Room, powered by BizRev Advisory. We're into part 2. Talking to Nick Richardson with regard to cryptocurrency. Welcome, Nick.
Hi.
So, Nick, with regards to how crypto is solving our real problems today, where do you see crypto really saving? It's obviously not future promises, but current use in our environment and commercially and etc.
I think the most demonstrable example of like a solution today is things like stablecoins in South America. So South America is plagued by like various levels of inflation, all of them generally speaking, the countries with like high inflation, Venezuela, Argentina, take your pick, are like very, very high, like north of 100%, which makes sort of life in these countries very hard. You know, if you're sort of working, and then the next year, like your entire sort of work is worth like half as much. So it's like how do you save? How do you plan for the future? It's like you create a very unstable economy, a very unstable social dynamic when people cannot like plan for the future. So then you have the like proliferation of stablecoins in these countries, which is like tokenized or like digital dollars. And with these like digital dollars, you have like the ability to sort of like do trade, right? Like you can take out a loan. You can exchange your time for money, knowing that like that money is going to be worth something in a week's time. So things like that, like very high inflation regimes, like stablecoins offer some refuge from that. Stablecoins are like the clearest and like strongest example of like solving a real world problem. I think the other useful thing is, although like these become a bit more experimental, is things where you have people like connecting people in one continent with people in a different continent, like underwriting loans to people in like a different continent. So like you're like giving people access to credit, like people in like the third world, like they can get access to like credit on favorable terms. So I think like things like this are quite good.
But Nick, that's really huge. I mean, I had no idea that. I mean, you can sort of hedge your wealth with regards to using cryptocurrency in the kind of countries like Venezuela, etc. I mean, that is huge. If you're having your capital eroded, that's massive. So, is it currently happening today? I mean, is it quite a big thing in different kind of economies where there's massive political unrest and massive fundamental problems in the economies?
So some of the biggest like users of stablecoins outside the United States are like these third world countries. You know, Nigeria, quite a lot of stablecoin usage there. So yeah, I mean, it's generally, you know, if you think about it in terms of like the dollar is a strictly better currency than like almost every other currency on the planet, like maybe X sort of like Swiss franc, or like a few others. So you know, you take the dollar and like you introduce the dollar to like a third world country, right? Like that's a strictly better solution than their local currency. Like you obviously you introduce sort of geopolitical or like internal issues whereby like the local government when the local government no longer has like a monopoly on like the creation of its like domestic money, like you can get a bit, you run into a bit of an issue there. But it's given the sort of like permissionless nature of the technology, it's not clear that like it's bannable. So yeah, it's like this is the type of like adoption driven by like non-speculative demand, like a demand for the technology for its like actual utility, which I find to be quite encouraging.
So, but I mean, in South Africa, we have seen we've started seeing that property is being tokenized. I mean, obviously, I mean, your view on that particularly, I mean, I would understand that actually you find it very positive, right?
I don't know the exact details of the properties being tokenized in South Africa. I think like the tokenization of things, generally speaking, is a good idea, assuming one gets like the legal construct correct. So assume like so if you tokenize say you tokenize like commercial real estate, that commercial real estate pays, obviously they pay rent, or need not be, let's say residential real estate, that's probably an easier example. So you tokenize residential real estate. So like what exactly are you tokenizing? Like are you tokenizing the rights to the cash flows? Are you tokenizing the like actual like ownership of the building? Like, and then like where does like the legal liability fall? So I think like tokenization as an idea, broadly speaking, of like, let's take this thing and then we can take it and put it on a blockchain and like cut it up into smaller pieces. So then, and then like anyone can like buy rights to like this thing. Like broadly speaking, I think that's a very constructive idea in terms of let's say as a South African, I can buy cash flows associated with like a residential real estate property in New York. Like I think like that's a great idea. But like the actual legal structure, like how, you know, if there's like a default, like as a holder of like a token in South Africa, like what is like my legal like reach in terms of like recouping there? Like where, like what is like the on-chain, off-chain like legal structure works? I think it's like quite complicated. But broadly,
Massively.
Massively. Yeah, broadly speaking,
just think
good idea.
The Reserve Bank and SARS as an example, I mean, both would, you know, those are two fundamental or organizations, state organizations that would be asking some heavy questions. Yeah. And if you don't do that, you know, responsibly, then there could be a serious consequence, you know, based on that on its own. But so tokenization it can be meaningful, and it actually can change the way we behave with regards to our assets, particularly. I mean, so I would assume that if it's done responsibly, it would be the right thing to do.
Yeah. Like I said, I think at a high level, it's because like the high level pitch is like you're taking a thing that's like illiquid, right? Let's say you're tokenizing a okay, we carry on like commercial real estate. Like so the commercial real estate has like a value, or the residential real estate, say that example. So it has like a value, like the building has a value. There's like cash flows associated with the building. But if you were to like sell the building, I think it's quite an illiquid market, like the spread's quite wide there. So if like you take the building and then like you take like the value, you strip like the value from like the physical and like you tokenize like value, however you kind of want to do that, you put it on chain, cut it into a bunch of smaller pieces. So now it's like more accessible to people because like you can buy like 0.5% of the building. So like the building becomes a lot more liquid. The value of the building becomes a lot more liquid, and it's also available to basically like anyone on the planet in theory. So there's much more like demand for the actual building. So that's like both like the liquidity and like the actual you're opening it to like an investor demographic that's like far bigger, or like the pool of capital becomes far bigger.
Yeah. It makes sense commercially, and it seems quite simplistic in the form. I mean, obviously to me, but the structure behind that might be a little bit more difficult to implement. So What are the safety concerns with regards to people who realistically should be aware of crypto? I mean, what concerns would you have with regards to if I had to buy crypto in however, or in any transaction? What are the risks to our viewers? What could the possible risks be?
Well, so like to start, there's no like FIDIC in terms of like insurance and like deposit insurance. There's no, like, we're getting there with regulation, but we're still like a ways off there. So it is still the Wild West, like metaphorically. It's less so of the Wild West than it used to be, but it is still fraught with risk. So things like, if you think about it, someone's buying crypto. So if you go through like the flow of like buying crypto, so you take your dollars or your rands, and then you send them to you exchange them for crypto, right? So you exchange them on a venue. So the first thing you have to do is sort of make sure that venue is safe. So you check the venue's safe, then you swap your dollars for crypto, right? Because like, what crypto you're buying, there's I don't know how many hundreds of thousands of cryptos there are. Naturally, a lot of it is worthless. I mean, there's obviously a bunch that are super interesting. So that the next thing is like, you have to make sure like you're buying something that has like value. And then like, once you buy the asset, like, you're underwriting like the risks of the asset in terms of like whatever, like the sort of idiosyncratic risks, and like smart contract risk, execution risk, team risk, etc. All the other like litany of risks. Then now that you own the asset, you got to think about like getting hacked, like, because it's like, it's self-custodial, depending on kind of what solution you use. So it's like not like a bank where the bank like holds your money. In theory, through some types of like transactions or like ways of like investing, like you actually hold the asset. So now you could be hacked. So like, it's generally pretty fraught with risk. A lot of that is getting worked out, but the main risks would be like counterparty risk in terms of like the actual venue that you're executing on, asset selection risk, the type of assets that you're buying, and then within like the specific asset, like idiosyncratic risk to that asset. I think like the easiest ways to sort of prevent that is like just using, like a Coinbase or a Kraken. Like, these are US companies. So that's generally like a good start, and then sticking to assets in the top sort of 20 by market cap. Like, you're avoid like most of the risk doing that. Obviously there's still like a bunch of risk, and then the other risk is things like there's a lot of like data breaches within, like, there's just data breaches generally like across like all industries, but like within crypto, like, you get a data breach, like, so then someone gets your email, they send you an email that says like, oh, you have to secure your account. You click on the email, you click on a link, and then like all your crypto goes, like phishing attacks, like that kind of stuff. It's sort of like at like a high level, the assumption is like it's just a very adversarial landscape.
Okay.
So yeah, I think those are the risks. So perhaps the last thing I'd say is like, you can also just invest with a fund manager, and then like they manage all of that for you, right? Like, so like they understand what they're doing. They take care of all those risks. They've been around long enough to not fall for these types of things. So I think that's the other useful way to think about it.
It sounds like solid advice. I mean, I didn't even know you would get crypto fund managers. I mean, is that a thing? Do we have in South Africa? Do we have fund managers around the world? I'm assuming there would be.
Yeah. There's a bunch of no, naturally, so South Africa being like a smaller player on the global map, there's not as many. Most being New York, London, Singapore. Other three biggest players. But I mean, you don't have to be in the same geography to sort of
no, fair enough. But I mean, still, your suggestion is looking at the top 20 market cap with regards to the funds, and actually use that as a base to start looking at where to maybe invest or wherever to buy in. It makes sense. And so pretty much, I mean, if I would like to start trading with crypto now, the suggestion would be, if I'm going to do it myself, spend a lot of time finding out which is the best and how to do it and investigating it, or getting a fund manager who will be able to take over some of the risk as far as management is concerned, which most investors do that. So it's no different in actually having your funds listed in an investment house. That makes sense. So Nick, thank you very much. We so appreciate your time and the valuable input that you've given. So we thank you very much. So
thanks for having me.
We look forward. Yeah, it's a pleasure. We look forward to having you on the podcast again. I'm sure we're going to have some queries and questions. And I'm trusting that you'll help us to be able to answer them. Thanks for tuning into the Rev Room, where growth meets execution. If you got value today, follow, share, and subscribe. For more insight and support, head to www.bizrev.co.za. If you're ready to grow as a leader, scale your business, and get compliant, reach out. Let's build something that lasts.